So hello everybody, hello. Well, as agreed, we're here this evening to talk to you about the annual results for the Thermador Group. So this is the investors' evening. So it's a specific meeting that we have every year, twice a year for you as professionals. This is the annual results, the profits meeting, and we have another meeting tomorrow which is more open. So this is a small committee this evening, so you can obviously ask your questions in English or in French. You can use the webinar to do this, and after about 45 minutes we will be able to answer any of your questions. So let me just specify that this webinar is in French and it's being translated simultaneously in English for our Anglo-Saxon investors who want to follow, possibly using the replay function. So we'll start this presentation with a focus on our staff, our employees. We've got teams that have grown in terms of numbers. We've moved from 712 to 777. So we've got some employees who've come from DPI, which is a company that joined the group on the 31st of October last, and 8 people coming from the company AFI, who joined us on the 1st of July. The difference comes from our own recruitments. 2021 had a big focus on development, and so we had to strengthen our teams. Once again, many thanks to our teams who managed to bring us through these chaotic years. 2020, 2021 saw lots of changes, lots of difficulties in supplies in 22 as well. So there were obstacles out there on the market. So this required us to be very agile, to be very professional and expert in the way we worked. And the teams did this, and I would like to thank them for that. Now, the important points for the year will start, of course, with the war in Ukraine. As you know, the group hasn't been directly impacted by that war. We didn't have any direct turnover in Russia or Ukraine. But there has been a very considerable indirect impact for many companies in Europe, especially when it comes to inflation. So prices have increased, prices of products have increased, and this has meant that we've had to share the average burden with our customers. So it's 10.8% that's been shared with our customers. That's quite a considerable amount. Another impact of this conflict and the increase is the increase in energy costs. So there was already awareness that, of course, it was important to save on energy in buildings in France, but now the awareness is even more poignant. So energy renovation is something that everybody's thinking about today. So building energy renovation is very important. And we provide heat pump accessories via Thermador and solar energy boilers. And so this means considerable increases in turnover for these ranges. So there was the acquisition AFI, specialized in couplings, that merged with Spherico in the middle of the year. So with an annual turnover of about 4 million. It's an acquisition that was financed to the amount of 1.8 million for the buildings. And then there was the acquisition of DPI, specializing in the sale of piping, plastic piping for public works, for wet and dry networks. So 60 million in terms of turnover in 2021. So this company joined us on the 31st of December 2022 for an acquisition price of 31 million and an additional price of 5.2 million, which will probably be paid after a probation period following the operating profits. Now, there have been cost pressures. There's been an increase in the payroll. We've had to accompany our customers, and Patricia will go back over the effects in terms of the income. Now, these cost increases haven't been faster than the increase in inflation, thankfully. So there's the cost of energy to be taken into account. Contracts are coming to an end, or came to an end in 2022. So there's going to be an increase that's going to be felt in 2023 then, because we believe the additional cost will be 600 million euros for cooling buildings as of 2023. Sustainable development, this is an important step that we have risen to. We now have a sustainable development manager with a small team of specialists. And this will help our subsidiaries to reach the objectives that we've set together, the objectives that we want to achieve between now and 2030. We'll find out more about that later on. Then there is the birth of Odrea, the daughter of two companies who have merged, Dipra and Rousseau. This is an operation that we announced in 2018 when we bought Rousseau. So it's been done. It was done at the end of 2022, and operations are underway to set up this bigger entity so that we can satisfy customers who are very demanding. So we're talking about DIY superstores, of course. Then there'll be a focus on our real estate assets. We've had them revalued following the work that we did at FG Inox. So we reviewed the value of our assets. So the amount is now 86 million. So last year the value was set at 66.5 million. So with a URD value of 56 million. Now let's have a look at the turnover. The turnover, which is going up this year, very much helped by inflation and external growth, because the figure has gone up by 13.8%. For organic growth, we're looking at a growth of 12%. 12% of organic growth for an inflation of 10.8%. So there's room for a little bit more volume, but we realize that there are ranges that have gone up, some have gone down, but there hasn't been a huge increase in volume, and the net profit has followed the improvements because we've been able to resist in terms of the margins, and also because the tax weight in France has gone down, and Patricia will explain that. So let's have a look at turnover per quarter over a period. In 2022, the year was very much positive for every quarter. There was a tendency to see an increase, especially towards the end of the year, because of the energy renovation activities and the inflation. The only negative quarter over the past 5 years corresponds to the first lockdown period. Now, Patricia, tell us about profitability and the turnover, of course, because I think we'll maybe move on to the next slide, if that's okay. So, in terms of our profitability, so our profitability, our operating income, plus 14%, with profitability with respect to the net figure at 6.4%. So we've got a slight erosion, but 2021, we forget this, it was a year that was exceptional for us, with a high level of profitability, a high level of turnover. So the fact that we've got this slight erosion is actually a good result. So if we look at the main highlights for the year, the main facts, so we've got the integration of DPI, which is an important point for us. It's brought additional turnover and an additional income of 600 million euro. DPI, it's 2 months, November and December, in terms of business. So next year we'll have the DPI business over a 12-month period. Now, if we look at profitability, so the most important point, this is where we've had a lot of questions, in fact, with respect to our ability to share the increase in prices with our customers. So Guillaume mentioned this already. So we shared the burden 10.8% with our customers. So 10.8% shared with our customers. And the question was, is there going to be an erosion of the commercial margin? Is this going to have a negative impact on it? Because, we won't be able to share all of the increase with everybody, with our suppliers and everybody. We lost 1.2% in terms of the consolidated figures, so there has been a small erosion. And if we look at the explanations per business pole, you can see that the commercial figures have been maintained. And have a look at the figures now. We've got stable margins, and we've got a 5-point loss for the consumer channel. So for the consumer channel, that's where we had the most difficulty trying to share the burden. So this is something that can be seen in the profitability of this activity. Now, if we have a look at the expenses to net sales ratio, we can see that our ratio is going down. We're at 20.7%, and this can be explained mainly by the changes in personnel costs, representing less in terms of percentage of our turnover. As Guillaume mentioned, we've recruited, and these recruitments have been concentrated in the second half of the year, and so we don't have the full impact of those yet. And as we said over the course of the year, we've been very attentive to the increases in salaries, and we believe that we've had an average increase in salaries of 5%. Now, with respect to the other important points, because we've got the personnel expenses, but also transport expenses that have to be taken into account, and that can be seen in the line other expenses and external expenses. And you can see that the figure has gone down in relation to the turnover, and that's because we've had a drop in the volume of sales. Now, when we look at the variations, the operating income has seen an increase that was not as big as the net result, and this difference is due to the tax rate, which is down. So 25.49% versus 27.52%, a saving of 1.6 million euros. And so this is linked to the announced drop, the digressive drop in increase. So we're at 25% and as we pay about 80%, that explains the rate that we're paying. And we can look at the variation of our net result. If we had maintained an income tax rate at 27.52, we would have had an increase of 8.3% instead of what we actually have. So 11.3%. So that's an explanation of changes to our net profit. Now, let's look at profitability per subsidiaries. We talked about the consumer channel, the retail business that had a lot of challenges in 2022, and this can be seen in the drop in profitability. So euro-dollar parity was less favorable in 2021 compared with 2021. And if you look at the entities, it's these subsidiaries that buy components from Asia and buy in dollars, and those are the entities who have seen the biggest impact. And then we've talked about the price increases and what we can see in terms of brand purchasing. With respect to other important points, profitability of brand purchasing, that's fairly stable, 70.6%. And if we look among the contributors, There's Thermador that's managed to maintain its profitability rate compared with 2021. And just to remind you, this subsidiary over the past 3 years has seen significant growth, over 30%, so the structure has evolved, but we've been able to maintain its profitability rate. Now, what we're also looking at is the contributive share of the 3 historical subsidiaries, Spherico, Jetli and Thermador, because these are 3 subsidiaries that represent an important share of the consolidated turnover. And we can see that these 3 subsidiaries cover over 68% of our operational profits. And we can also see that there's been an increase in that contributive share compared with 2021. So this does underline the increased results of Jetli, and this has had an impact on profitability. And Spherico will have an impact in terms of overheads. Now, with respect to the other points, Axelair needs to be pointed out. Axelair, which is seeing a loss again in 2022, but the positive fact is that the business is growing when it comes to brand purchasing, when it comes to its professional market. It's business, it's basic business. So you can see the breakdown there is good. So there's an increase in that turnover, but there hasn't really been any considerable sales with respect to mobile air conditioning, the mobile air conditioning market. So they've still got a lot of inventory and they've got a lot of overheads with respect to that business that hasn't really generated a lot of money. But hopefully in 2023, they will reach break-even point and continue to see growth in their business. And then there's Odrea, no result for Odrea this year. And that's because of the euro-dollar parity and the difficulty in sharing the increases in prices. So there are 2 key indicators that we follow, the ROCE and the ROP. So the ROCE is the return on capital employed. We can see that the ROP is just over 14%, which is a good rate, slightly down with respect to last year, but it's a good rate. And then our ROCE has gone down slightly, so this can be explained by the fact that we've seen changes in our cash position and also changes to our working capital requirement. And I'll go into the details of that a little bit later on. Now, with respect to our financial structure, so what's important, these are the key financial figures that show how solid we are at group level. So the inventory value is set at 190 million, so representing 192 days of sales. So, and there's the service strategy as well. So we're still focused on distribution, and we're still storing a lot so that we can ensure service quality. The cash stands at 16 million. I'd like to underline the fact that we've generated cash over the past 6 months. At the end of June, we had a negative cash, and here we are at the end of the year with 16 million. There have been additions from the subsidiaries, but there's also been a lot of work optimizing inventory value. We've got our loans and financial debt amounting to 46.6 million, shareholders' equity that stands at 299.7 million. So let's move on to the working capital requirement part. Now, this is an important element. So we've seen it as a percentage in terms of days of turnover, and we've got a graph here with the important points that make up the working capital requirement, and we can note that the inventory value is the biggest with 190 million. It's up compared with last year. We've got our customers who are also seeing an increase So that's linked to inflation, and we've also got something else that's structural. In Spain, the payment deadlines are quite long, and activity was stopped because there had to be the migration operation organized, and so that's why we have that result for Spain. Now, we also need to point out the drop in supplier help. That's also linked to the work in terms of lowering inventory levels. So let's have a look now at the cash flow statement. Patricia, maybe you need to remind people of something in letter 108. So yes, there's the normative inventory. Yes, we had communicated about a normative inventory in terms of days of consumption. So 190 days, we're not far from that. And there was another element that we talked about, a percentage, a normative operating WCR at 35%, I think. Shouldn't we look at the end of the year figures? We're at over 39% at the end of December 2022. So we're not yet at the operating WCR with respect to the values that we might have seen in the past. So let's talk about cash now. So 16 million, so we're in a positive position. So we've generated cash over the past 6 months, as I said, and we've got cash flow from operations 67, so self-financing possibilities there. We've got a change in the WCR that amounts to 42 million. So that's the impact of the variation, the increase in inventory for our customers. Even if we're seeing a drop in a supplier debt, it's not that big an impact yet. And there's another thing, and that is the DPI price that is in our debt. But we made provisions for this for 2023, 2024. So that's something, so we find this in the variation of the WCR. In terms of investment flows, you've got the acquisition of DPI, of course, and also investments. So CapEx investments amounting to 11 million euros in 2022. So this gives us a free cash flow at minus 9.5 million, so it's negative, and that's explained by the acquisition of DPI representing an important amount. That acquisition, we allocated the goodwill value of DPI to the customer relationship, and that amounted to 13.9 million. So that's an important point when you look at the overall profit and loss statement. So financing flows amounting to 2.2 million, 18 million in terms of dividends distributed, 31 million for the acquisition of DPI. So we're looking at a fixed rate. Most of the flows give us a cash consumption of 11.7 million. I'll move on to the next slide now. No, I'll move on to the next slide. No, sorry, I'll hand over to Guillaume. It's Guillaume's turn. So, yes, sustainable development. Let me just resituate the objective of the group. So it takes us through to 2030, this objective. So we've got 19 indicators that we'll have a quick look at now. So we've got a path to follow then through to 2030. We're on the path we're on the right path, in fact, if we look at our indicators and how far we are with respect to our objectives. And it so happens that this grid of objectives may change considerably in the coming years, because you know that European regulations are changing quickly, and that we will be impacted by this new regulation. It's called the CSRD, and it will impose new indicators, other indicators. Perhaps some that we already use will be reused, but there may be a big shuffle over the next few years. But we're ready. We're ready to meet all these new European requirements. So the equality index, so we're at the same level. We still need to have bigger we need another woman in a management position with a big salary. We're already over 40% in terms of women in management positions. So that's one of our objectives. I don't think we'll have any difficulty maintaining that objective. In other words, over 40% in the next few years. We're certainly going to be paying attention to that. Now, average seniority, we've got the same score as last year, so we're very happy to be able to see that stability. It's the proof that most employees feel comfortable in the Thermador Group. If they stay a long time, they're even more efficient. And so it's a win-win situation for us. So we're very happy with those results. The percentage of permanent employees trained per year, both internally and externally, is going up. So we're still far from our 2025 objectives, but we intend to achieve those objectives, especially by focusing on internal training on products and processes. And then there's absenteeism with a slight increase due to the increase in sick leave in 2022. Nothing serious there, but we need to just keep an eye on that. And it's probably due to everything that we saw in 2022, COVID, flu, and a level of fatigue, let's say. Now, when it comes to governance, we've got indicators that are very good. There's the attendance rate of the board of directors that is still very high, so they're very good at coming to meetings. The participation rate in the General Assembly is over 70%. It was 74.1% last year, so we're going to continue to make sure that that stays at a high rate. Patricia and I will be fighting for that. It's very important. Now, employee ownership. So we're seeing something stable, so we want to increase employee ownership. I think that some employees have used their FCPE for personal investments, so we need to continue to help them so that we reach the 8% and then the 8.5% that we've targeted. Perhaps we need to imagine other ways of doing this. And then finally, the percentage of exposed employees trained in anti-corruption is very high. We organize training and refresher courses every year, so that there is no risk of a scandal or corruption. Now, the environment. The indicators, direct emissions, first of all, for our vehicle fleet. So we've reached a kind of a level. We will be changing our vehicles. We'll have electric vehicles in the future. We're waiting for those to be available, and we're waiting for current contracts to come to a term, come to an end. Then, when it comes to the next two indicators, direct emissions for heating and cooling and lighting our buildings, there we're on the right path. We were helped by the weather this year, so we have to be relative about this score. We'll see whether we will be able to reiterate this good performance at the end of 2023. Now, the Scope 3 indicator, indirect emissions, a complete failure there. We wanted to share our ambition to reduce emissions with the market, but given the uncertainty and how we calculate that, we don't want to set any objectives for the moment. It's very complex, in fact. We have to do this hand in hand with our suppliers, because most of these direct and indirect emissions, well, especially indirect emissions, come from products manufactured by our suppliers. So it's something that we have to do jointly with our suppliers. When it comes to waste from our activities, there's been an increase, mainly due to FG Inox, because they moved. Obviously, we don't see moves every year. And in terms of waste recovery reuse, we're very well organized. We can still make progress, but you can see that it's already a good level. We can finish now with societal indicators, focusing on our supply chain. So we've made progress in the way we rate our suppliers. We do this in a more harmonious way. And so we've stepped beyond our objectives for 2022. The next step will be to focus on suppliers with the worst scores. For the moment, we're focusing on our first assessment. So we've got some good ideas for the future. We'll be doing more rating and audit work. The percentage of turnover from ISO 9001 and 14001 certified suppliers, 87.4%, that's a good score, but we need to do even better. But we're on track for achieving our targets. Now, percentage of turnover achieved by ISO 9001, 14001 subsidiaries, we're on the right track again. We've got two big companies, Thermador and Jetly, should be working on that subject a lot in 2023, so that will help us to achieve our objectives. So there's a new company that's been certified as well. And that represents a smaller figure, though, with respect to Thermador and Jetly. We've also had the pleasure of seeing that our suppliers agreed to sign our responsible purchasing charter. So there was no stalemate situation there, which is a good signal for the future. So a few words about prospects and business generally. So 2023 should be fairly similar to 2022, with a focus on energy renovation, a market that's more difficult when it comes to new housing. Hopefully we'll see something better in 2023, but whatever the case, renovation and energy renovation should help us work on those markets. So we'll be focusing on those areas. In terms of industry, so we've got market shares in France, in Europe. We're continuing to increase our ranges. We're reaching out to new customers in order to spread that business, but it's more of a long-term objective. At a pace, it's something that will take place at a more reasonable pace compared with energy renovation. But we've got some great prospects in France and in Europe. So the retail business will probably be difficult in 2023 because the purchasing power in France in 2023 will either be stable or will drop. And so the retail market, the DIY market, will be a little bit subdued still in 2023. In 2022, we only had a 1% increase in turnover here. So there's a loss of volume on these markets. And then in terms of exports, for several years now we've been saying the same thing. You know, we're still looking to have more market share in many countries. So we're still optimistic about our ability to increase our export business. But Sodeco had a record year in 2022. So that marks a kind of a level in 2023. We can't have record years every year. So we'll probably just remain stable in 2023. And perhaps in Spain with Rousseau, the business will remain stable after some very dynamic years. And there's the necessity to reorganize the merger with DIPRA. So as part of the new company, Audria. Inflation will remain very much present in 2023, at a minimum 40%, probably 5%, if not more. Inflationist years are still ahead of us, and we will continue reasonably to share price increases with customers and suppliers. Do you want to talk to us about real estate, Patricia? Yes, and investments, because this year real estate represents less, 4 million. So globally, we're thinking of 8.5 million in terms of investments. Some investments will come from subsidiaries, some will come from our information system. So tied with that, we're going to continue our work on the information systems. We've talked a lot about Audria and the merger. It's a legal and social merger, but it's also an IT merger. So we're working on that. The migration will continue through to June 2023 with a lot of developments, with the objective of developing productivity ranges across all of the sites. Audria is specific. It has 4 sites and an office in Shanghai, so Saint-Quentin and in Spain. So that's part of a project that's going to keep us very busy. There's the e-commerce sites. We want to continue to produce a number of e-commerce sites for subsidiaries that don't have any for the moment. And with respect to the other projects, there's the CRM, so customer relationship management. We've got a project in this field. We want to change our CRM system so that our sales teams can be more efficient in the way they follow up their customers. So those are the big projects. We've also got Thermacom, which, if I'm right, we bought it in April 2020. It has a different IT system, so the objective would be to migrate it so that it's using the group CRM system, so the same, using the same system as PB Tube. There's an accent there. I don't know why there is. Yes, sorry about that. I wondered why there was an accent there. There isn't an accent normally. We'll do better next time round. Sorry. But it doesn't change the meaning. We are talking about prospects and good prospects because we're going to continue with our projects. So we can move on to the next slide and talk about capital. So our financial indicators, we heard from Guillaume about the capital, help our employees and old employees in our FCP. So that's part of the capital share. What has to be underlined here is that we've got a share that has changed with the increase in investors, institutional foreign investors, at 49.1%. And we can note that the share of institutional investors, foreign investors, is at just over 26%, 26.2%, says Guillaume. So that includes our German investors, accounting for 9%, so our biggest foreign institutional investors, therefore. So we're looking at over 40% for individual shareholders, with a total number of 8,700. So we've seen some great progress there over the past few years when it comes to individual shareholders. When we talk about numbers, we'll talk about individual numbers, individual shareholders. Now, a little bit about the trading volume. So it's trading is down, as you can see from the diagram. 72 shares traded, compared with last year where we saw 1.87 million traded. It's not linked to the group necessarily, but it's something that affected all average values in 2022. If we look at the positive side of things, the volume is going up compared with 2019. So I think we're coming out of years that was different when it came to trading. We're moving into a calmer period. Euronext changed from 80% to 70%, and that can have an impact on our presence according to certain indices, because if you decrease the floating value, you increase the capital. So we'll see whether this has an impact. And there's another important point that you can see on this graph in color. It's the share in 2020 of dark pools and alternative platforms. There are a certain number of blocks. Well, there's a lot being said about these dark pools and alternative platforms at the moment. So let's now talk about the resolutions for 2022. The General Assembly will be held in Lyon. And the resolutions, there are a certain number. The first will concern the allocation of our result. So we'll be looking at a distribution of dividends amounting to 2.08 euros, and we're looking at a growth of 4.2% with respect to last year or the year before. So that's it for dividends. We've got some changes in terms of the board of directors. We've seen some renewals. So some mandates have been renewed, and a new board member has been appointed. You probably know Karine Gaudin, who's been an independent member for 12 years now, as an independent member of the board of directors. So given our next code, after 12 years, no, it's not possible to renew a mandate. So Karine will be leaving in April 2023, and we are proposing by vote the candidacy of Véronique Bousquerolles, who's an economist in Lyon, as a former financial director for the Boiron Group or Boiron Group. So this is a period that is important. We wanted to keep the independent nature of our board members, and that's why we, of course, with her agreement, we've put an end to her mandate, and you know, she had reached the 12-year period. We've got 12 board members, 5 of whom are independent. So if we look at the number of independent board members, 2 board members are reaching the end of their mandate. So there's Olivier Villemont de la Clergerie, who's the general manager of DNC. So we will be asking for his mandate to be renewed. We will put that to the audit committee. And there's also Mathilde Yagoubi, who is also president of our Sustainable Development Committee, and we will be asking for her mandate to be renewed. So these are our resolutions. Then there's the headquarters that's been transferred. That's important. And Scopelli will be following us with our communication company. We've got resolutions with respect to management earnings as well. So as part of the resolutions proposed for a vote, variable earnings for myself and Guillaume. So that's the first part. The second part concerns the validation, the vote for the remuneration policy for 2023. So that concerns people with mandates who are part of the Thermador Group. And then there's a resolution with respect to the salary of Lionel Munro, who's the deputy director of the group. And historically, his remuneration was approved by the CFCO structure, and the shareholders of Thermador Groupe weren't allowed to vote on that remuneration. So we've decided to change that, and we're putting forward a resolution so that shareholders also vote for the fixed remuneration of Lionel Munro for his mandate as Delegate General Director of the Thermador Groupe. So we will say yes to that. There's also, it doesn't concern the earnings of management, but the earnings of independent board members, we are setting a maximum envelope linked to the work of the board members and the work that is carried out in the different committees that we have. And now let's last look at share prices and dividends over a long period. You can see that there was a gap in 2022. Many companies saw that with a good bounce back operation that follows. You can see this on our website. This is a very dynamic graph. It shows things. It shows the situation of the Thermador Groupe over 10 years. The global efficiency, the global value of shares was 17% compared with the CAC 40. So we did quite well. So, but it was only 10.4% for the CAC 40. So 18.4 for the 10-year period, therefore. That's the yield. So, Jean-Pierre, almost 3 months that DPI has been a part of Thermador. How are things going in real life? And what about the Thermador culture? Is it being absorbed without any pain points for IT, behavior, financial discipline? Jean-Pierre, you know that company culture, all of the companies in the group have their culture. We know that by experience, that when you get to the Thermador Groupe, it takes time to settle in. We had a discussion about this with the first shareholder who said it takes at least 7 years. And in 2 months, of course, we haven't created a revolution at DPI. The directors are staying where they are. We get on well with them. Now, the first thing to be done, of course, is to set up the financial reporting operation. Becoming a listed company, it's not nothing. It requires a lot of discipline when it comes to the financial reporting operation. And so there are going to be changes to the organization of DPI. And if the changes have in fact started, yes, indeed. Yes, things need to be much more fluid in the future. So there's been the appointment of admin directors. So that will be somebody from DPI who will be changing their position. We'll be talking about the impact of sustainable development as well. There's the code of good conduct as well. Before we bought DPI, obviously, we wanted to make sure that there were no practices that went against the way we operated. So we wanted to make sure that they were in phase with us, and Gregory will be following training to make sure of this, so that everybody is on the same footing when it comes to these questions. Again, Jean-Pierre. Jean-Pierre, we don't have the consolidated figures yet in terms of the share of Thermador brand products. So we need to have a look at the share and the products sold with our manufacturer's brand name on them. To talk about the company that has the best progress, this company has a partner, an Italian partner called Califi, and this means that they have access in English to information. We sell an awful lot of products for energy renovation with the Califi brand and other products for the Thermador brand, and I can't really say just yet. You know, the pro rata has changed. It changed in 2022, so we don't have the figures for you yet. It's not, we don't want to increase the products sold under our brand name or our supplier's brand name. We're pragmatic people. We respect our suppliers if they want to have good visibility on the French market. And the idea that you have, often there's more margin on products with our own name compared with products under another name, an industrial partner's name. It's not a reality for the Thermador Group. It's not linked to the commercial margin. The margins for the Thermador Group are good. Do you have a question in English? So Bastien has a question in relation to the pro forma revenue for general public buildings. It's a bit complicated because, you know, we've got the share according to subsidiaries with a very fine granularity. We've got a share according to market, and that's what you're going to see today with the universal registration document. Between now and a few hours, or tomorrow morning, says Patricia, you'll be seeing that tomorrow morning. And on pages 4 and 5, you've got a share per market, building, industry, cold water, retail, and piping. Large tooling. So that share is linked to markets with specific types of piping. And if I'm right, so we're looking at 50% for building. For industry, it's 23%. For domestic pumps, it's 17%. And the piping is going to go up next year by about 10%. This year, we're at 1.6%. And for major tooling, we're looking at 8.7. So the difficulty that we have is that we want to present according to market and according to distribution channel and according to company. And so it's that's why it's difficult to know whereabouts we are. When we talk about export, this concerns several companies. When we talk about retail, this concerns several companies. When we talk about industry, that concerns several companies as well. And when we talk about building, that also concerns several companies. So that adds difficulty in terms of analysis. And then there are some groups that work in building and in industry. So that's just to say that it's difficult to answer your question directly. You've got some information about export, the export business. I'll give you the page number. So the export share of the group went up last year, taking it beyond 70%. Because of the progression made by Sudeco. So that's the export situation. And for the retail business, you've got the sum of Audria and Mecafer, and that represents about 20% of the activity. So it's difficult to know whereabouts you are. So there's an awful lot of analysis involved, and then you've got the results where we reason according to subsidiary or distribution channel, and we haven't made the link with respect to the markets where we're looking at turnover. When we're talking about the operating income, we're just thinking about subsidiaries. Bastien is asking a question about the growth prospects, the external growth prospects for 2023. There are none. Very clearly, there are none. There are no acquisitions in the bottom drawer. We did make a big operation last year in terms of an acquisition, in terms of cost, price paid, turnover. So we need time to continue to integrate the companies that have joined us lately. Patricia said this, there's an awful lot of IT work underway, especially with Rousseau and the new company. So of course we'll be looking out for opportunities, like the DPI opportunity, but we're not necessarily focused on external growth. You're asking about Germany. What about Germany? Do we have any external growth prospects linked to Germany? Quite honestly, no. We know the German companies that we might be interested in, but they're not ready to sell. So that does reduce the probability of seeing a positive conclusion to that question. So Antonio Baldi and the evolution of our free cash flow. Antonio underlines the growth of our inventory, which has a negative impact on our free cash flow. And the question is it the increase in inventory that has the biggest negative impact on our free cash flow? And this inventory level versus our level of sale, is it satisfactory for us? And are we aiming at a different level? Let me just remind you, with respect to the inventory, that there is an increase, but if you look at the impact on the free cash flow, it's the change of the working capital requirement. You've got the increase in inventory, we're at 19 million in terms of an increase in inventory, but there's also the increase from customers. So the inventory has a role to play, but then there's the growth in turnover that follows on. So even if we had presented it as being too high in December 2021, we started to bring it down. Are we happy with the level, with the 190 days? I would say no, because our objective is really to come back to the figure that we mentioned, 190 days. So that's going to continue, and it's linked to the management of the working capital requirement and the generation of cash. In the previous financial communication, we specified this. It takes time, of course, because in September there was this awareness among our subsidiaries, and adapting the level of inventories with respect to the changes in sales. We know that this takes time. It takes a bit more time. So the work has started, and we see this in our supplier debt, and we're going to continue this work in the first half year of 2023. Guillaume is asking about organic growth for 2023. Green, orange and red. There are products that are going to continue to grow a lot, like around energy renovation. Some will remain stable, some will see a drop. What you want to know is, in terms of consolidated values, what are we looking at in terms of organic growth? This is what we ask the directors of our subsidiaries to do. And they do this, they look into this with pleasure, but with a certain amount of uncertainty when it comes to the economic activity, generally speaking. Remember, just 2 months ago, we were all afraid of a brutal recession. For the moment, it hasn't happened. But, you know, in 2023, who knows what will happen? The brakes might be put on the economy. So I talked about inflation at 4 or 5%, perhaps even more. An increase, decrease for certain product ranges. 2023 has been presented as an economic recession year. Perhaps it might be a stable year for us, and if so, that would be great, at least for turnover. purposes, with a kind of a step back when it comes to organic growth. So this would be reassuring compared with, you know, the prospect of the recession that everybody was thinking about 2 or 3 years ago. So we can specify that in the shareholders' letter, we're maintaining our objectives based on an average annual growth of 7%. So that brings together growth that is organic, but also any possible acquisitions that we may make in the next 10 years. So I can't see any more questions in French, in English. So what we're planning to do now is to put these slides on the site this evening. So very soon you will have the universal registration document available in French. The English version of the universal registration document is on its way. We're just finishing the translation. We can't go faster than the speed of light. And as you know, we're an average-sized company, but Patricia and I are available if you have any questions that come up. So please feel free to get in contact with us. Thank you for being present with us. Thank you for your questions. See you very soon for the General Assembly, at least. I'm sorry, I didn't catch the date. I'm sure the date will be on the website. So please, if you can come physically, that would be great. You will be welcome in Lyon. But you can also participate digitally. If you can't come physically, then, you know, please vote. Please vote. Vote access. Thank you very much.